Before we go on our first break today, we'll move on straight to our next panel conversation, which Tayo will be moderating, and he'll bring up other members of his panel conversation. So I'm handing over to you again, Tayo, for the conversation on state of the market, new and emerging frontiers in the new normal. Over to you.
Okay, thank you so much, Bojibade. And on this panel, I'm glad to have Tola Akiyomi come back on stage. Head of Real Estate West Africa, Stanbic IBTC. Dr. Krish Raganath, Regional Executive Director, West Africa Data Centers. Dr. Chris, please come up. Senami Amusu, who's Corporate Finance Manager at Landmark. Funke Okubadejo, Director of Real Estate at Actis. And Ronald Phillips, Senior Director, Agility Logistics Parks. Okay, ladies and gentlemen, I'm quite excited to actually moderate this panel because this is happening towards the end of the year, and where a lot of us are, getting ready strategies and plans for 2023. And on this panel, we have people that understand the market and, in particular, different aspects of the market. So, essentially, you're watching a crystal ball unfold in front of you on how the market has performed and how the market will perform in 2023. So, I'd advise that you listen very, very attentively. As we've just seen from that, presentation that I did, the West African market, has performed, quite differently, across countries. And it will be very exciting to hear, in better detail what has actually happened and, our expectations for 2023. If we were sitting on this panel just 3 years ago, countries like Ghana, Cote d'Ivoire will be coming first, second. And they've quickly been displaced by, Senegal, and the Gambia, being even more exciting, in recent times. So I'm just going to start off with you, Funke. Obviously you lead investments at Actis. So from an investor's perspective, in 2022, what trends have you seen? How have the various subsectors performed? What's been hot? What's not?
Thanks, Tayo. Pleasure to be here again, and also, be able to be more positive than we've been probably in the last 2 years, seeing what's happened. I think from our perspective at Actis, we focus on, obviously we invest in sustainable infrastructure across different sectors, including real estate. And from that, we've always, taken a perspective to look at what's going on a global basis and how relevant that has come to be, looking at our separate markets. So we look at global themes and see how we apply them. I think the key thing for us is, really trying to go back and say, what are the key drivers that are impacting real estate in particular in this case? I think you'll find that quite a number of the drivers are things that have existed previously. So, we look at things like your demography and the level of supply in the markets. I think we've coined something, I'm not sure whether it's almost global as well, looking towards what they call the new economy. So when you look at demography, I know Nigeria is number 5, but those demographic things are actually very critical here in terms of the undersupply that we continue to have. I think another key theme that comes to mind is the digital disruption that we're seeing that is beginning to affect various sectors. I think it's driving demand for the logistics and light industrial significantly. We're also seeing that it's creating demand for a new sector where there's a lot of activity that's happening across all markets in terms of data centers, where you're seeing demand growing quickly, given the different technologies that have to now have cloud-based services that support them. In the last session, you talked about institutional investors and their focus on real estate. What we're finding out is in terms of that, you're seeing a demand for a yield that's also going on for investors. So there is demand by institutional investors looking for yield, and then that presents some opportunities also for real estate to be able to attract investors. I think the last sector that we're also seeing, probably coming out from COVID, is almost having a different sense in terms of what demand and what are the demand drivers is. So for us, for instance, globally you're seeing life sciences. I think closer home in Africa, you're seeing things in terms of being able to provide infrastructure that supports social welfare in terms of healthcare being a key theme. We're seeing social, also in terms of education, student housing is a very popular sector. I think for us, and the philosophy for us is, what is sustainable infrastructure? It's what is the demand that is needed for businesses. And I'll beg to differ. Some global themes don't really always apply. So if we look at the retail sector, the lack of deficient supply and increasing demand is probably a more key factor for us in our markets. So you're seeing that, in spite of what's going up in the global markets, the retail sector is extremely resilient. There's actually a lot of demand there. And conversely, due to the headwinds that we have, there's very little supply in the pipeline. So you're seeing quite a number of activities based that was coming. I think the another point that was touched on was the fact that at this point in time, development yields are lower than your prime yields, and there's significant opportunities to actually buy existing real estate, reposition them. We've seen quite a number of activities going on in the hospitality industry in which Actis has been a participant of in particular. And I think that can be extended to quite a number of the other sectors for the points that was mentioned regarding the discount to the net asset value, or the values being lower than the replacement cost at this point in time. And so I guess the overall message is that, that I'm not going to come up and say there's this one fantastic sector. I think it's a good understanding of your market, it's a good understanding of all the dynamics. And I think that's critical. One of the key things is that the market is so important, having a good understanding of the market. And I think that's where, places like Northcourt, Brawl, and the others, Estate Intel, not that I don't have any favorites, to mention, but getting the data and having a good understanding of what parts of the market you want to participate in. I'll be remiss not to talk about the residential space. I don't think I have to say too much on there, but opportunities remain in Africa. At the same time, we have to recognize where we are in the cycle. There are a lot of headwinds that are in the market, particularly when you look at interest rates and inflation that are rising. So those have to be taken into consideration in your strategies in terms of how much risk you take, how much leverage you can actually put on projects in this period.
Awesome. Thank you so much, Funke. And you said something. Said some global headwinds don't necessarily always apply to us. And then you said we do have our own idiosyncratic pain points. So I think that's something I'll touch up with you, next round of questions. But I'll just move very quickly, to Dr. Krish. Dr. Krish, I was at the API conference in Joburg earlier in the year, where it was almost as if the theme of the conference was data centers, right? It was a real estate conference, but there was just so much conversation about data centers and how hot they are, and we're beginning to feel that in West Africa. So can you essentially just school us, on this demand for data centers? Is it a search for yield, or is it demand that is necessitated because there's just a proliferation, of tech companies requiring, data centers? And if you can speak to the kind of yields and expectations that investors, into data centers can expect.
Morning. Thank you for that question. If you look at the African geography for the last 2 years, a lot of data center growths are happening, correct? The primary reason also need to be looked at that, a lot of submarine cables are getting added up. Okay, now earlier we had only 1 or 2 cables like SAT3s and other ones. Now, in Nigeria, we have 6 of them are live, 1 more is coming. So this indirectly means that the global data, the access to the data will become much easier. And again, looking at the Nigerian population, officially 210 million, if I'm correct, and it is adding up. So these people need to have
200 million.
200 million. Correct. So out of this 200, around 60 to 70% need to have an access to internet and the contents. This content need to be localized. This content cannot be sitting abroad. Okay, now these are entertainment contents, official contents of the nation. Okay, official contents like banks, data, and the national assets or national contents, it is mandated that it need to be localized, correct? Yeah. Then, of course, we have our Africa Magic and, the entertainment content.
Yeah.
If you look at Africa as a continent, around 1.232 billion population, and everybody is much inclined towards entertainment and living a jovial life. Though we have our own issue to deal with, that's the other side of the coin. But these are some of the factors which pulls, the data center operators or service providers to come into Africa. This is number one. Number two, if you look at the global market, parts of Asia Pacific and Africa is the terrain which is growing. Because if you look at the European content or European side or the US side of the market, it is grown up to a decent level, correct? So this is the one which is growing, and this is where majority of the investors are focusing on to put the infrastructure, though it is not an easy task because of the various existing regulations in place, various other things. But if you look at in the general perspective, there's a good growth coming up, and if you look forward for another 2 to 3 years, we will have either more players coming in to this market, number one. Number two, and the expansions of the existing facilities also will happen. Because the market studies says that Nigeria as a country, we need 1,500 megawatt of data center facility. 1,500 megawatts till 2030. But if you take even 50% of that, 750, we are not even near to that.
Wow.
It's not available in the current market. So there's an opportunity. There is an inward look for the major players, the major global players. They're looking towards, especially the West African belt. They're keen in investing or keen in putting their own infrastructures, so which is currently ongoing.
Great. Yeah. Those are some interesting stats, and it shows that in second round questions, perhaps I'll be talking to you about how long do you think this demand will be, will last for. But I'll move quickly to Tola. And Tola, I'm just going to ask you the same question I always ask you when we meet, informally. The first question I always ask you, obviously after saying hello to you, and which is, where is capital flowing? But at this point, when Funke was talking, she spoke about, various subsectors and how, some are defying even global themes, right? Like retail. So which subsectors is capital flowing currently? Where do you think it will be flowing in 2023? And if you may, I think if you can speak to it from a West Africa perspective, because obviously, Ghana is not as hot as it used to be. What's the scenario there? What's the scenario with Cote d'Ivoire and other countries that, West African countries that you cover?
All right, thank you very much. I hope you can hear me. I actually disagree that Ghana is not as hot as it used to be, but let me just leave that as an aside. But yeah, from our perspective, I think post-pandemic, we've seen growth in the asset class. It's been positive seeing assets stabilize and even begin to perform. What you've also seen is it's an expansion beyond traditional retail and offices, and you've seen other asset classes begin to spring forward. We've talked about data centers here, talked about industrial warehousing, student accommodation, and those other subsets. So I think that's what's happened is that the the sector is more robust. You're seeing increased participation by local retailers, local developers, an increasing mix of local capital and offshore capital as well. So I think that's quite exciting. How we've tried to calibrate it from a point of view in trying to grow and support the market is along themes that we're seeing. So you're seeing also corporates that require their own space, be it for warehousing, be it for office needs, actually creating those solutions by themselves, rather than, and I mean, there will be corporates that would have to have their own offices, similar to what we're doing in Zambia. We're currently building a new head office, right? So there are multinationals that are within that space as well. We've seen a tenant in a reputable building acquiring their own property. So that type of owner-occupier type prospects. But I think there's opportunity in that space for equity investment as well, because yes, they may have the land, some capital, but better use of that capital, it's also having some JV funding, and then they then occupy the entire premise. So there's an opportunity space. Alternative assets we've spoken about, and it cuts across the market. So from a Nigerian perspective, Ghana, Cote d'Ivoire. Yeah, we financed the recent data center asset last year. We know there are expansion possibilities there. There are parties interested in acquiring new assets to even create more. I'm a bit woolly there, because I mean, there's a question we asked and you asked in terms of demand, effective demand there, but the theme is established in terms of how technology will drive the future, and I think it's taking those steps ahead. Another critical area which Funke mentioned is retail. I think we haven't scratched the surface of retail still. Yes, there has been a lot that has evolved in the last few years, but you know, there is opportunity and space for convenience centers across many cities, and you're seeing forms where the groceries, I mean, with the exit of ShopRite or the transmission of ShopRite, there's also local brands, you know, that are coming up, and the idea is creating smaller type offerings that are in neighborhoods that are, if I use the term banking, unbanked or unretailed. So there's that opportunity. I think a segment we shouldn't lose sight of is the residential space. There's been a recent PENCOM policy change, which allows contributors to access 25% of their savings or their balances, you know, to contribute as equity for home ownership. I think that can scale the market significantly. So if we assume on the basis of 14 trillion assets under management, a quarter of that is closer to 4 trillion. And if that's 20% of equity contribution, I'm just going to create a 20, I hope my math is right, 20 trillion residential market. Not in year one, but that shows where the bread can really be. You know, so I think that segment would which is always a critical segment within real estate asset classes, would grow. On a country basis, I think in all markets there are increasing opportunities. If we start with Cote d'Ivoire, you know, there are growing interest, you know, within the office node, within retail, that one is seen. Following a new retail center that I think is about 3 years old now, but there are scope for more development there. Ghana, I mean, there are macro challenges, but there's still quite a bit in terms of the opportunity space there. that one is in, and of course from a Nigeria perspective, despite the macro challenges, you get the sense that the pipeline, the discussions that one is having with different stakeholders, you get a sense that there's, post elections, there's really going to be a springboard. So I think the opportunity space is deepening, and we will see growth within the space. Thank you.
Fantastic. I mean, I must say, Tola, maybe you should have stood beside me when he was doing his presentation, just to douse down all the gory details he gave us. You paint a much better picture. And also, thinking about the pension, the recent, allowance of 25% of your RSA, thinking about it on the individual basis, it may seem small, but think about the amount of money that can go into residential property, which you've just said, for about, it's even over 4 trillion, 25%, that's a lot. That's a lot, and I think the word has to get out there more so that people can begin to start tapping into that. The word has to get out more, and we'll see how we can do that. Okay, Senami, just going to ask you a specialized question. Obviously you work with Landmark, and you're just about one out of maybe 2 primarily mixed use developers. How's mixed use real estate performed in 2022? And be curious to know what aspects, what are things that makes mixed use, having multiple uses within one facility, what makes it tick, and are there any downsides to this subsector?
Thank you. So you very defined also where mixed use destination property, and we have 6 major segments. So the commercial real estate, the high street retail, which you talked about. We also have the leisure, hospitality, the conference center, and we also have a residential complex coming in. So in terms of how we have seen the ecosystem perform over time, I will speak to 3 things mainly. First of all, footfall. I would explain footfall, non-rental income, and what's the other one? And new solutions. So first of all, because we are mixed use, we're very particular about tracking our footfall. Footfall is the number of people that come into our ecosystem. What that does for us, it gives us information, it gives us data which we can use to address the problems in each of the different areas. So what we're trying to say, we actually, what was I call it? We're actually we provide local solutions to global problems. So the first one is, so we use footfall a lot for all our data, and we track that weekly. So that's important to us. It's also important for the different segments. For the retail segment, it helps us understand what needs to be addressed, how they need to perform better. For the commercial real estate, it also helps us address what companies can come into our ecosystem. The next one is the non-rental income. What we have learned from the COVID period was that relying on rental income, there is a disadvantage, which you said. And we had a strategic decision where we'd have to see how we can increase our non-rental income, optimizing our capital structure. So we said non-rental income is our focus. And non-rental income can come from various ways. But the key driver for our non-rental income is the footfall. And let me just give you an example. We started focusing on different areas of non-rental income. One particular new one that we just started with is the sponsorship and advertising. So we put a lot of LED screens around, and we were able to approach and talk to the FMCG groups and other companies. And what's important about that is that for the conversation to move faster, we're able to support that with our data. Data, meaning our footfall data. And we've seen we've seen more and more FMCG approaching us and trying to take up that space. And what we've seen consistently, especially for this year, going into the end of this year, our non-rental income has actually improved, and we're almost at 74% of our revenue size. So we're hoping that by next year, we will be able to push that non-rental income to at least 80% and see how we can attract different types of revenue streams from that. I think.
Awesome.
Thank you.
That's fantastic, and I think you're speaking to the question that was asked to the last panel. Talking about how rental income sometimes psychologically doesn't match the risk-free rate. But you're doing 74% in non-rental income. You've already scaled that hurdle, I can imagine. So very well done and very interesting to see. All right, Ronald. you work with agility and you're doing, international grade warehousing. I think using those, international pair of eyes, where would you say, West African warehousing is at? What's the maturity levels? What are the things that you see are the challenges and what are the opportunities?
Sure. So just for context, Agility Logistics Parks is an publicly listed institutional developer of logistics real estate. We have a portfolio of 3 million square meters of leased warehousing and a land bank of 10 million square meters of land across India, the Middle East, and 5 countries in Africa. We're a long-term institutional developer, so I mean we take a long view on this asset class. We're a specialist in logistics real estate. In Africa, we have a presence in 5 countries: Cairo, Lagos, Abidjan, Accra, and Maputo, with a view to expand to around 10 markets. If you look at warehousing industry maturity, there's nascent or kind of early stage markets where people store goods in go-downs, and there's mature markets where people use modern racking and they have equipment and they use warehousing software. If we had to think of warehousing maturity and our markets, where we focus solely on emerging markets, China, India, South Africa, Morocco are mature markets and they know how to use modern warehouses, whereas all of our West African markets are early stage when it comes to warehousing maturity. So in most of our markets, our tenants have never used racking. They've never used equipment. If you go to the largest warehouse in Ikeja of the largest e-commerce player in Africa, they don't use racking. There are big signs which say how to lift correctly. It's how to lift correctly. You wouldn't find this in a warehouse in a developed market. So it's very early stage, but we're building grade A warehousing across these markets. We see a big opportunity. There's a severe lack of international standard warehousing in these markets. And a lot of international players and even local players want to transition to international grade warehousing simply because it's more efficient for their operations. So we see a lot of our tenants coming into the markets and asking for this. So in Cairo, we're building a 40,000 square meter grade A warehouse, 20 meter high for Amazon. And we know which markets they're looking at across Africa, and they expect the same standard of warehousing. So we see a big opportunity. There are multiple challenges, obviously, when it comes to land acquisition, building on schedule, even long leases. In developed markets, you expect long leases with your tenants. What's happened in our experience is that at least 50% of our tenants over the last 5 years have either increased or decreased the space that they lease from us. So if their business is going well, they lease more. And if their business isn't going well, and some of them have just got hammered in these West African markets, so then they have to reduce space or even leave the country. So it's still in its infancy, but we see a big opportunity and we're here for the long run.
Fantastic. Great. Okay, Funke, a company I know very well that produces market research says next year is going to be a year of 2 halves, right? Pre-election and post-election in Nigerian context. What do you see that's going to be happening pre-election? How do you see the market performing pre-election, and how do you see the market performing post-election?
You're asking for a crystal ball perspective. I think first point here is, we're long-term investors. We're looking at long-term trends. And it's very difficult for you to change your strategy in real estate, as you all know, in 6 months. So I think people are just going to make a bet on the long term. So I think on the long term, those themes I spoke about, I think they're critical. I think obviously if there's any significant negative shock like we had on COVID, that's going to impact the outlook. Our sense is, we've been in this cycle, I think this is probably the 5th of this, and everybody's expectant. I think if there's any near-term expectation for me, it will be just slowing down decision-making by some organizations that could impact sort of the demand that you expect to see could be slower. And hopefully you'll expect that, whatever the status quo that exists post the election will mean that, people can now begin to make decisions. So I think my own overall outlook continues to be optimistic. I always joke that, being in West Africa, Nigeria, you don't have a job, but being optimistic about the future. And so I think my own sort of expectation is probably more just slowing down decision making. I think the things that I focus on more that could have more impact is sort of more in terms of, liquidity for raising capital that's going to impact businesses. Also investors' point of view, which I think could improve rapidly post the election. I think everybody keys into those key terms. I've heard them repeated by every speaker in terms of where they see the opportunity set. I feel we've been in a holding position for a while, that it's possible the election will actually improve things very well. That's just the investment outlook. But on a status quo of where we are, I think the worst case I would believe is just slowing down decision making.
Yeah, and that last point you made reminds me of a conversation I had with a friend that no matter what way the elections go, and I'm not making political statements here, but no matter what way the election goes, it would have a favorable impact, because like you said, we've just been in holding position for too long and things just need to move forward. All right. Dr. Krishnan, you spoke very favorably about data centers, and I'm sure people in the room are just curious. Is there any downside? Come 2023 or, in the near future, is there anything that can, stall or even actually, derail this projected growth, that you talk about?
Which I doubt. Of course, there may be slowdowns because of the political situations and, of course, even during the COVID, it was peak of even our own construction work which was going on. So, nothing stops because you need to have the place ready when the business is coming to you. That is a fact all about. Because we cannot look at our own brands and say that we need to slow down or, we need to push fast. What I am thinking, or on a personal level, what I look is that, we have 210 million, correct? And out of 210 million, how many people are working with me on a project? Maybe 700 or in 800 projects, 800 people, correct? Can I slow down? If I slow down, if I put my tools down, that 800 people go home. That is the biggest impact which I see. I know, we coming from the business background, we can slow it down and say to the investors, okay, there is COVID, there is election. But that 800 people going home, they don't have anything to say. That is what we need to take care of, as people who are handling businesses. Yeah. So, in my perspective, nothing slows down, keep moving. Just keep moving, or, simple ways, keep walking. That's what it is.
Yeah. At least now I know your favorite drink. Yeah, Tola, I mean, I've not checked, but I can imagine that your headline rates have gone up. So, and I'm not just speaking just from a Islamic perspective, just thinking through, financing, in a slow economy. What kind of flexibilities, have you put in place or can be put in place, to support, your developers, people that, take equity or debt financing, from institutions like yours?
All right, thanks, Tayo. And I mean, I share Funke's sentiments as well as what has been shared in terms of it's long term. I've been lucky and privileged to work with our clients, developers over time, and it's decades of managing these assets. Debt plays a critical role within the capital stack, and you have to collaborate, understand the perspective both from even the lender's side, because we are regulated by a central bank, across markets, as well as ensuring, that you meet the client's needs and as well. So you're drawn across various devices there. But the role that we play as lenders is a supportive role. There are nuances within the economy, within the cash flows, and you have to be proactive, in dealing with some of those headwinds. And there are structures in place right from the commencement of the project, and looking at project considerations, looking at what leverage works best for the asset through the stabilization period, right? And of course, when macro headwinds come, you also have to be proactive to deal with that. Because at the end of the day, it's the cash flows that would repay as well as provide the yields that investors are looking for. So the role that debt plays is to enhance those yields at the end of the day. Different assets at the same time. And when I say different assets, I'm talking about classes. So from offices to retail to industrial to hospitality, the cash flow characteristics differ. And an understanding of that and the structuring or structuring solutions within, it also has to speak to it. So I think from our perspective, we remain available, working and collaborating with clients as they stabilize existing assets, as well as expand the market, because I do think there is scope to do that. And there are different solutions, from interest rates to there's no FX edge, but those are also there. We play a dual role where you can look to optimize where an asset ends USD. You can structure along those lines, and yeah, I think that'll be what I'll share there.
Fantastic, that's great, thank you. Senami, hospitality and lifestyle. What are your thoughts going into 2023? How do you see it performing? Do you agree that maybe it's going to be a year of two halves, bad and good, or what are your thoughts?
Okay, going into the election year, those are actually our two defensive sectors going into that space. Our real estate assets in the hospitality, leisure, and recreation space are actually doing much better going into this space. We can even just use a typical example. We know how the travel restrictions from Dubai has been happening. All our hospitality assets, actually on the beachfront, has been doing above what they're expected to do, and they have shot over their targets. So we're very optimistic going into the election year. We're seeing those three assets outperforming all the targets that we've set.
So maybe I should have asked, how's your office going to do?
How is
office going to do?
So for the office spaces going into the election year, another advantage, again, I'm speaking from my experience, is that a lot of the office spaces have long-term leases. So we've already locked in, as much as possible, we've locked in at least a 5-year contract going into the election year. So as Funke spoke, this is a long-term investment, and we see this, the real estate space, and this is our mixed-use development space, outperforming this year, as going into 2023.
Awesome, fantastic, and lucky you. Okay, Ronald, what trends do you see, going into 2023 and beyond? Because obviously you're the kind of assets you build, it's even much more long-term, the kind of clients that you have. But considering, the growth, the impact of growth of e-commerce, we have, people like Jumia, Amazon is taking an office, in VI, what do you see the trends to be?
So I think the big growth driver will be e-commerce. That's the fastest growing segment within our asset class. We have very deep relationships with e-commerce majors, and on the real estate front, they've specifically, we have their plans for all the countries, and there's a fundamental shift in their business model. typically earlier, because of same-day delivery or next-day delivery, they need to be much closer to their customers. So this changes the paradigm for logistics real estate. So right now we have the requirements, and you have big distribution centers on the outskirts of the city, but then within the city, you have multiple last mile delivery stations. So, you know, if they want a 40,000 square meter distribution center on the outskirts of the city, that's our bread and butter. But now they've asked us, can you build or get us 10 last mile delivery stations inside the city? And it's really hard because the land prices are very expensive, and you don't find greenfield sites within these cities within these mega cities that work. So then you have to look at creative solutions. Are there brownfield sites that you can repurpose? But then permitting becomes a challenge. So I think there's going to be a big surge in inner city last mile real estate demand, not just for e-commerce, but also for adjacent use cases, cloud kitchens, dark stores. There's a whole bunch of startups that will build these business models. Cloud kitchens, dark stores. So all of them need real estate inside the city. And I don't think we can be the only solution provider. It's going to have to be other asset class owners. If there's a mall, and if there's a dark part of the mall that isn't seeing much footfall, a dark kitchen or an Amazon or somebody wants to lease that space, because they want to be as close to their customers as possible. What that means for you as a mall developer is, do you want 100 delivery scooters outside, right, in terms of traffic? But that's the big opportunity. E-commerce wants real estate inside the cities to deliver deliver same day to their customers, Amazon Prime, etc. And it's an opportunity for all of us, not just the logistics real estate developer, but residential, commercial, everybody.
Fantastic. All right. I think conversation has been great. I'm just going to move over to, to the audience. If you have any questions, just pop your hand up. I think we have time to take maybe one or two questions. Pop your hand up and you'll get a microphone. Okay, we have a hand at the back.
Still good morning. So thank you all for this really exciting and insightful session. But my question is, because the panel discussions about new and emerging frontiers in the new normal, and I was curious for one of the topical issues, which is all about green buildings, green financing. I'm sure we've heard about recently great raising, about 300 million, I think it's from Standard Bank, in green financing. So I'm curious your perspective regarding the new trend. I mean, I'm sure a number of you attended COP27, which has to do with climate change. And we have to understand that impact in terms of our sector in construction, development, buildings, in that entire ecosystem. What is your reaction to this new trend? Are your customers asking for solutions that incorporate green building tendencies? And what is your planning for the future, especially given the topic of the panel discussion? Thank you.
Okay, is there any panelists that would like to touch on that? Okay.
Thank you for that question. So we're currently building a property at a landmark, a residential component, which is a landmark Waterview apartments. And yes, we're familiar with the green financing. We've done a couple of courses regarding Green Edge from FMDQ and some other partners. What I would say, I would speak from our perspective as from funding, looking for funding and accessing funding for that project. What we found out was that having the green tag and making sure that we ticked all the boxes gave us a wider base of investors, but it did not necessarily bring down our financing cost. And from an operational point of view, we were very particular about that financing cost because we know what it does to real estate. And since we were not able to tick that box, this is from our own experience, we haven't progressed too much on green financing. But we have done everything we need to do. But to be able to the green finance investors are able to see how they can bring down the interest cost or whatever financing cost, it needs to be more accessible to some of us that are in that space.
Now I see why Senami was eager to answer the question. She wanted to touch on it, but I think we'll get.
Yeah, thanks, Chime, for that question. I think green for us at Actis, we were way ahead of the curve before the market kind of picked up. So we're quite excited that it maybe offers an opportunity, one, to be able to differentiate ourselves. I think we've been pioneers in green buildings, way ahead of knowing what is needed. And I think the question we always ask ourselves is, why are we doing this? It cost a little more in terms of capex, and there was no clear benefits. And I don't think tenants were willing to say, we will pay you a little more because it's green. So we had to reach deep down in ourselves. I think today, we know that it is very critical in future-proofing your assets. I think one of the key benefits that we're actually seeing, because we do have varying degrees of how green the buildings we have. So one of the assets that we own is at least 30 to 35% cheaper on energy costs. So with diesel costs right now, energy costs right now, it's amazing that you wouldn't have to make any comment about energy cost in running the building. So it does go down to the bottom line ultimately. I think also we're beginning to see the fact that, as we're seeing more multinationals come into the space, we always get excited when people have a checklist and they are what we define as a buyer who has understanding. They're not just looking at price, they're looking at quality. And previously, a lot of them stayed in B-grade buildings, even C- buildings, because that's all that existed. So today, when they have to do like a beauty parade, I think those green credentials are important. So if it doesn't provide a higher rate in terms of revenue, it provides more resiliency in terms of the tenancy and the quality of the tenants and the quality of the covenants in the building. I think the last point is in terms of financing costs. So I think with Standard Bank did one of the first green financing. I think we pushed very hard to really try and understand, the benefits. And yes, while modest, obviously if you're lending significantly, a 25 to 50 basis points reduction in your interest cost also really helps in there. So I think I did feel disappointed that it wasn't like 150 basis points reduction, but it does matter. So I think the overall benefit, so sitting down many years after we make the decisions and we sat down, we said, we're not quite sure what we're doing. Sitting down right now, we do see the benefits. We're going further to actually now make sure that all the assets we have in our portfolio are green. And we found out that it doesn't take that much to actually do that, and the benefits far outweigh the cost. And then when you think about the long term, when the overall market follows, I think it's actually just critical for something we have to do.
Awesome, Senami, for showing you your future. Ronald, you want to touch on it? Yeah.
Thanks for asking the question, Chinwe. So we take sustainability very seriously. Our portfolio of warehouses across India, Middle East, and Africa. We've already put solar panels across India and Middle East. We've seen a reduction in electricity bills of 33 to 50%, which is massive for the tenants. So just on an economic case, it makes sense to do solar. We've started certifying our buildings as EDGE. Our warehouse in Riyadh is the first EDGE Advanced certified building in the Middle East and North Africa. The question is, do tenants really want the green building? Would they pay more for that? I don't think so. If they work out the math on the operational cost of their solar, then yes. But when it comes to that beauty contest, what we found with multinationals when they come to Africa is the lease rate is still what outweighs thing, and then green is a nice to have, unfortunately, for them. But we plan to do that across our portfolio. We've had some financing discussions. On the debt side, like Funke mentioned, it's not too much of a benefit, but on the equity side, it is a must with all the DFIs. All the DFIs, it's a basic requirement, edge certification. So, I think we will have a full portfolio of edge advanced warehouses. I think a big opportunity for all of us on the real estate side is, listen, the biggest driver of emissions is transport. So we see an opportunity to reduce emissions from the fleets of our tenants by providing charging for electric fleets. So we've spoken to companies that we've invested in. We're an investor in a very large manufacturer of electric trucks called Volta Trucks. And what we're trying to figure out is, listen, these trucks are parked at our warehouses for large periods of time. So we have solar roofs. Can we charge the electric vehicle charging infrastructure that charges their electric trucks? So we can decarbonize more of the value chain, which is transport too. I think that's a big opportunity. We would like to do that, but I think what we need to find is people who are willing to invest in electric fleets. So you have a couple of large companies, the 3PL companies, logistics companies that are starting to do that. But if we are able to find more EV fleet owners across Africa, then I think that's a big opportunity on the transport side too.
Thank you so much for sharing those thoughts. And on that note, I think we'll have to call it a wrap. Or do we have time for one more question? No, we don't have time for one more question. Thank you so much, panelists. It's been fantastic listening to you share your thoughts.